Last week, I talked to you guys about the state of crypto. This week, I want to talk to you about the state of money in general. The world is absolutely insane right now as far as the economies of the world go. The state of money in each and every country in this world is shaky at best. The economies of countries are shaky in spite of, even here in the United States, in spite of the fact that the economy is doing fairly decent now over the last 2 or so years, in respect to the last 10, 12, 15 years. Last couple of years have been really pretty decent. But looking at the state of money in general over the world, money is shaky. Doesn't matter what country you're in, doesn't matter what economy the country's in, money in general is in shaky state. Our governments have printed money over and over again to keep afloat the little kingdom that they've built. And as they need to supply their kingdom with money, they've printed money. The sad thing is that this United States went off the gold standard back in the 70s, and our money lost 30% almost off the bat. And over the years, our money has lost more value and lost more value and lost more value. And it's interesting to note that Bitcoin, when it came on the scene back in 2008, 2009, when the crash happened here in the United States and caused a ripple effect around the world, it's interesting to note that cryptocurrency was already in the making, but made its appearance in 2008 when our economy started to tank because our government didn't have the wherewithal to solidify things in our government, and they just continued to do what they were doing and continued to print money and continue to print more money and more money and more money, and to continue to actually steal money from its citizens to pay its debt. We look today, 10 years after the fact, and the state of money is just as bad, if not worse. The pattern of money over history has been the when the governments devalue their currency and then they start to lower interest rates to cause inflation to try to become low, the money has stabilized slightly, but not very much. And then when the Feds decide that they're going to raise interest rates, that usually causes another flux in money and in the state of the economy and creates other issues. And we usually see a major decline in stocks and in the market and in the economy in general. And right now there's talk about the Feds in this country raising rates once again. If they do that, as history has shown, the government is going to raise rates, and when the Fed raises rates, we're going to start to see a ripple effect of that, and we're going to start to see people take money out of stocks and bonds, and we're going to see them start to put it into gold and silver and other precious metals. And when that happens, there's going to be that ripple effect. Now, what is going to happen when that effect comes? And we know it's going to come because the average for corrections in the market is 6 to 8 years. We've been in this blown up economy for 10 years now. And the Feds are talking now again about raising rates. And because of that, we can guarantee that there's going to be a ripple effect of the Feds raising rates. And with that is going to come damage to the economy. And when that happens, where are the people going to put their money? Well, they're going to put it either in precious metals or they're going to squirrel it away. But what happens if all of a sudden our economy goes belly up and we decide that our money is useless? If everybody takes their money out of the market, where's it going to go? Well, there's a new asset class called cryptocurrency, or digital assets actually, and people are going to start to put their money into digital assets, try and make it safer. And when they do that, you're going to see such a wave, such an effect on the markets, the stock market, real estate, cash in general, and on commodities, that things are going to tank for a little while, and the ripple effect is going to be throughout the world. And the reality is that the people who have cash in the markets or have it in the stocks or wherever it may be, they're going to start to squirrel that away either in precious metals or in digital assets. So my encouragement to you is to look into digital assets, look into cryptocurrency, look into Bitcoin and Ethereum and XRP and all those, to look at the top 10 to 15 cryptocurrencies out there and make a decision, read the white papers in the on those cryptocurrencies and see where you would want to put your money to give it a safe haven for the ripple effect that's going to come, because it will come. That's my short jaunt on the state of money. Take care, and we'll talk to you soon.